You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson from WallStreetWindow.com. Welcome to the show, Mike.
Oh, how are you doing? Good to talk with you.
Taking a look at your website, some very interesting topics for us to talk about. First of all, you say we're entering a dark period in globalization with the focus on Greece and its economic crisis. Apparently, if they don't go along with the strategies suggested by Germany, they could be out of money by the end of the month.
Yeah, we're actually at a real interesting time when it comes to Greece, and I'm watching this very closely because back in 2012, I actually invested in Greek stocks. I bought GREK, which is an ETF that tracks them, and I made about 100% return off that investment. So, I think whenever this crisis gets resolved one way or the other, similar returns will be had in Greek investments again. In 2012, if you can recall, that was when the crisis really hit the media in the United States and in Canada, and they got a bailout done, and the stock market, of course, went up over 100%. And now, here we are 3 years later, and of course, this is all in the news again, and no one really knows for sure how it's going to be resolved. There's really two main possibilities. One, like you said, as things stand now, the government there is poised to run out of money in February. So as we're speaking, the new finance minister for Greece is meeting with the European Central Bank and the IMF and all these financier groups to try to get an extension of the bailout, and then they would use a period of months to renegotiate and get things back on track. And the left-wing party that won these Greek elections a few weeks ago, they wanted do something to make the debt manageable, and the Germans are saying they don't want to give any ground, but it's tough to tell if these are just tough negotiating stances or what. But I think by next week, I'm reading today, they're saying possibly on Monday, we should hear something out of these meetings, whether they're going to get an extension or not. And I think if they do get an extension, then things will resolve. The Greek stock market will start to go up again in a sustainable manner. If they don't, though, then they'll be poised to basically be a bankrupt country completely by the end of the month. And, that would mean they could leave the euro and so forth. And if that's the case, then I think we would probably see the stock market drop again. But ultimately, an end eventually to their economic problems. They'll just print away their debt. But interestingly enough, if that dire situation were to happen, it would actually become a good buying opportunity again, because a lot of times almost every time when a country goes through a crisis like this and the stock market crashes and the currency crashes, it actually turns out to be a bottoming opportunity. This happened in Argentina a couple of years ago, and actually in Russia this fall. The Russian stock market crashed. It got in the news, and the ruble basically fell over 50%. And interestingly enough, ever since then, the Russian stock market has been going up. So this is just a situation we have to watch and see how it unfolds. I think there will be a good buying opportunity in the Greek stock market. And the thing about it is the Greek stock market is at a valuation comparable to where the United States was with its stock market at the bottom of the Great Depression.
Right, and you've pointed out to us in the past that one country's disaster can be a great buying opportunity for everybody else.
Yeah, it certainly is. And that's really, the most recent example is Russia. The Russian stock market really fell in November and December. I didn't do this at the time, but to give you an example, the RSX ETF which owns Russian stocks, it trades on the U.S. Stock Exchange. It opened at $14.63 on December the 17th, and it had been above $22 in October. So you're talking about, a 50% drop or something in a short period of time. And from that opening of 14.63, it's gone up to, as of right this moment, $16.80. Well, that may not sound like a lot if you think about high-flying stocks or something, but that's a tremendous return. Just if you, what is that, about 8 weeks for a stock market. So those are the kind of things that come right on the bottom, and the Russian stock market also is very undervalued. It's got a cyclically adjusted P of about 4.5. And then again, that's a depression level valuation, and the U.S. stock market has a cyclically adjusted P of around 26. So to give you a comparison, that doesn't mean it's going to go up straight up week after week, but I do think it is an investment buying opportunity in Russia. You can buy, for example, Russia's biggest bank. The symbol is Sam, Bob, Robert, Charles, Yellow, SBRCY, and it's paying an 8% dividend. It's tough to find things like that in the United States.
And I'm also wondering, too, with globalization, you have so many countries trying to devalue their currency, the huge drop in the Canadian dollar, the Japanese yen, and so on. But if all these companies are connected internationally, really there's no gain at all because it's all part of the same system.
Yeah, that's a good point. And I right now, as we're talking, the Treasury bonds of the United States are below the 10-year bonds for like 1.8% or something, super low. There's negative yields in some of the European debt markets. And like you said, these currencies are all dropping, except the U.S. dollar at the moment. Even the Canadian dollar has taken a beating compared to the U.S. dollar over the past year, which is really pretty remarkable. But I fear that one day we're going to see bonds go into a bear market because these interest rates just are unsustainable. I mean, how can you have 0% rates for the rest of our lives? And you would think, there's going to be debt problems or something somewhere. And people talk about Japan being a troubled place, different, besides Greece, Italy, and Spain, or some of these other countries, or even the United States one day. I don't really know where the next place will be. But if you can remember way back to the 90s, around 97 through 1998, really, but starting in 1997, there was a series of debt crises that took place in Asia, in South Korea and Singapore and Indonesia and several of these Asian countries. And they would go from country to country. Their stock markets would blow up. Their currencies would collapse. Argentina also got hit at the same time. And Brazil almost did, but managed to dodge it. But the point is, and then of course the Russian crisis that hit in 1998 in the fall was the biggest one as far as affecting the U.S. stock market. But the point is there's a rolling debt crisis going on over the world, and it ended in that Russia situation and the Fed lowering rates and bailing out the long-term capital hedge fund, and we got the internet bubble as a result of those low rates. But the thing is, I wonder if one day we're not going to see another series of rolling debt crises again. I don't think that's coming this week or this month, but it could start, by the end of the year in Japan, or I don't know really where, but somewhere, and be a big thing that really impacts things.
We'll have more with Mike Swanson right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on The Goddard Report and TalkDigitalNetwork.com, call 604-699-8600. 604-699-8600.
Welcome back. We're speaking to Mike Swanson from WallStreetWindow.com. Mike, An interesting thing on your website, Bill Gates no longer the big holder of Microsoft stock that he once was. That's what made him a multi-billionaire. What's the story with Bill Gates right now?
Well, he did an interesting thing over the past couple months. He transferred billions of dollars worth of Microsoft stock, $1.5 billion in November alone, to a private charity that he operates. That they do medical care and stuff all over the seas or over the world. And the thing about it is that he did that right at the top or close to the top of Microsoft. And I think he did a smart thing because the Microsoft stock, of course, has done poorly over the past couple of weeks. It gapped down in January on its earnings and is yet to recover, and it frankly looks like a broken stock. But by doing this, he's created a giant tax write-off for himself, a charitable donation. And, he's diversified now out of owning Microsoft. And interestingly enough, he's not even the biggest shareholder of Microsoft anymore. The reality is Steve Ballmer owns more shares than Bill Gates, and more than that, there's a handful of Wall Street hedge funds and mutual funds that own more shares than Gates does, even more than Ballmer does. The Vanguard Group owns 5% of all the shares outstanding, while Gates owns about 3%. There's a fund called Capital World Investors that owns more than Gates. The State Street Corporation owns more than Gates. And there's a BlackRock hedge fund that owns 220 million shares. So it's no longer really a Bill Gates company. It's more of a Wall Street hedge fund, operation. And Gates is kind of, a bystander now when it comes to Microsoft.
There was a time Microsoft had the most millionaires working for it, over 420, apparently, because they took shares instead of pay when the company first started off. Is that still the case?
I don't know the exact number of people, but I'm sure there's still quite a few of them. I don't know if it's really produced more millionaires since that story came out. That's been several years ago because, that was following 2 or 3 decades of stock gains, and Microsoft is now, basically a giant mature company, not so much a growth stock story anymore. You could hear stories like that, too, about Walmart and Intel and all these other things that, did well in the 80s and 90s, and really the past couple of years been more like a so-called blue chip that just goes up and down, and, people are buying for the dividend and not so much some big growth stock story.
Another headline on your website, stock buybacks are killing the economy. What's the problem there?
Well, that's something interesting in two things. First of all, what's been happening is that last year, U.S. corporations spent about $700 billion on stock buybacks. And to do that actually represents 4% of the entire American economy, 4% of GDP. Now, what's interesting about that is that in order to purchase $700 billion worth of stock, which means they're buying stock that's trading on the stock market and making the stock go up and also reducing the share outstanding. So in theory, shareholders of these companies can benefit by the companies doing that by making the stocks go up. However, to do this, they have spent 54% of corporate profits. These are the companies in S&P 500. So for every dollar of profit they're making, they're spending 54 cents on buying back their own stock. Now, what that means for the economy is that they're not using their profits to increase their capital spending. They're not doing it to expand business operations, to construct more plants, to hire more people or pay higher wages. It's not going into what I would consider to be true investment. That's something like if I'm running a company, let's say, and I want to invest some of my money to make more money, that's not what they're doing. Instead, they're buying back stock. I think that's an indication of a lack of, real prospects for the U.S. economy in regards of there just isn't much stuff, or the people don't see opportunities to invest in the real economy. Like, we would like them to have those opportunities, but they're just not there. The economy is so weak, and it's just not what it was, 10 years ago or 20 years ago. But the other thing, which I think is even worse in the long run, is the stocks are overvalued now. The thing about, we mentioned Microsoft, the thing about that is it's trading at like a PEG ratio around 2, and 1 is the mean valuation, and that's the story for almost every stock in the Dow. These things have been going up for 5 years. Everyone knows they're overvalued. What they tell you on TV, though, is valuations don't matter because stocks go up forever, and because interest rates are 0, a dividend yield is worth paying any price to chase. That's been true over the past couple of years. Some think it's true today. I don't. I think that's crazy to keep believing that. And one day, there's going to be another bear market. It's just not realistic to believe that the stock market's never going to have a bear market again. I don't care what Jim Cramer says or the people on television. We do not live outside of history or financial cycles. The rain is not going to stop falling outside. We're not, every year there's winter, there's summer, there's fall and winter, and next year it's not going to see the abolishment of all these seasons. And the stock market's the same way. So the problem when it comes to stock buybacks is when another bear market comes, that will mean they've just blown all this investment money in their stocks. And in some of these companies, which is really insanity, they're actually issuing bonds and borrowing money to buy the stocks, shares. IBM is the poster boy for this. And look what happened to IBM stock. Last October, it crashed, basically. It broke. It has not gone back up, just as Microsoft broke in January. So it's just crazy, man. And then all they're doing is the CEOs running these companies, they're getting paid in stock options. So it's almost as if they're selling their own stock and getting their companies to buy it from them. And it's just a bad incentive system we got set up for this stuff. It's almost like the banks back before 2008 when they were doing their 30-to-1 leverage and didn't care about the long-term solvency of their companies just so they can make a good earnings report. It's just, that's what we have leading these companies, people like that, and it's really a strange situation. I mean, we are living, I think, if you listen to Gerald Celente or lots of people on the internet, they'll talk about these conspiracies and how bad things are and stuff, but in the end, I think it's more that no one's running stuff and that the so-called elites running these companies or the world or the country or whatever it is, they're just nihilistic and looking at their short-term interests and not planning ahead at anything.
Yeah, I was just going to say too much focus on the quarterly report rather than long-term planning, which is what China has always done historically. Yeah,
that's right. And I think the culprit is that in corporate America, everyone, like you just said, everyone wants to make the earnings report to make the stock go up. And in China, they don't care about that. It's just as simple as that. They're not worried about their stocks going up or down. They're looking much more further into the future, and it's, a much better way to think of things.
Mike, thanks a lot for chatting with us.
Thank you. It's always great to talk with you.
My guest has been Mike Swanson from wallstreetwindow.com. You can contact Mike by email by punching in wallstreetwindow@gmail.com. You're listening to HowStreet.com radio on TalkDigitalNetwork.com. You can find us on Twitter at TalkDigitalNet. You can also go to our popular YouTube channel, Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at talkdigitalnetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.